Billionaire investor Paul Tudor Jones backs Bitcoin and gold amid market challenges. Renowned investor Paul Tudor Jones has shared his bearish outlook on stocks while expressing optimism for gold and Bitcoin BTC. In a recent interview with CNBC, Jones cited two main reasons for his cautious stance, including the potential escalation of the conflict between Israel and Hamas and subpar fiscal conditions in the United States. The investor discussed the factors he is monitoring regarding the Israel-Palestine conflict before concluding that market uncertainty has decreased. His general thesis is that if tensions escalate further, a risk-off sentiment could dominate financial markets. Despite the potential for geopolitical tensions to rise, major U.S. indexes have recorded gains in the first two trading days of the week. However, if Jones' assessment is correct, this rally is likely to be short-lived. Historically, one of the most reliable indicators of an impending recession has been the yield curve. Every recession since 1955 has been preceded by an inversion of the yield curve between the 2-year and 10-year Treasury bonds. In July, the 2/10s yield curve for U.S. Treasuries reached a low of 109.5 basis points, a level not seen since 1981. Although this inversion has since steepened, the situation still appears unfavorable for shorter duration treasuries. Currently, the 1-month and 3-month U.S. T-bills yield approximately 5%, while the 2-year note yields close to 4.96%. In contrast, the 10-year yield stands at 4.65%, resulting in a 31 basis point inversion of the 2/10s curve. A flatter yield curve limits banks' ability to borrow cash at lower rates and lend at higher rates, which can lead to reduced lending activity and an economic slowdown. It also reflects less optimism among investors regarding the near-term future of the economy as they sell shorter duration debt, resulting in higher yields. Rate hikes to further put pressure on banking system. The Federal Reserve's aggressive rate hikes aimed at combating inflation have further strained the banking system. This year alone, 3 out of the 4 largest U.S. bank collapses occurred, including Signature Bank, First Republic Bank, and Silicon Valley Bank. Some market observers speculate that the Fed may need to lower rates as early 2024 to prevent further economic fallout, even if inflation remains above the Fed's desired level. Easier monetary policy and increased liquidity typically favor the crypto markets. If rates do decline during the 2024 Bitcoin halving cycle, significant market movements could be on the horizon. Amidst the current market chaos, both gold and BTC have demonstrated resilience. While BTC has experienced a 2% decline in the past 2 trading days and remained flat over the last 5 days, gold has gained 2% during the same period. "I can't love stocks, but I love Bitcoin and gold," Jones said. The billionaire investor has previously mentioned maintaining a 5% allocation to BTC, considering gold and BTC as safe haven assets during uncertain times. Jones initially announced a 1% allocation to BTC in May 2020 during the COVID-19 pandemic lockdowns.